Let's talk about China, because that's the other story which we continue to track. The press conference over the weekend on Saturday did not give out a big headline number, but I think close China watchers were of the view that a large number was not to be expected. It perhaps will only happen once you have a meeting of the NPC, which is later this month. They've kept hopes of stimulus alive, but will that be enough is the question. With Benjamin Cavender, Managing Director and Head of Strategy at China Market Research Group. Benjamin, good to have you with us here. Thank you very much. That's exactly what I wanted to ask you. Will investors stay interested and look to deploy till we actually get that big number on the stimulus?
I think investors should stay interested. I think there's a chance that the NPC comes back with a big number and really firm plans on what they're going to do with the money. But I have to say, so far on the ground here, when you talk with corporates, when you talk with private equity, VC, institutional investors, I think the feeling on the ground is still very conservative. I think there's a fear right now that perhaps the government doesn't have the wherewithal to put in place enough stimulus to really get the economy going strongly in the right direction. But I think everybody's hoping to be proven wrong, is how I would put it.
Why is that? Is there a legal constraint? I mean, deficit has been about 3% for many years in China, 3% of GDP. But is there a legal limit to whether you can raise it too much?
No, it's interesting. They already have about $300 million earmarked to spend this year that hasn't been spent. So I think the plan is to spend that regardless of what other new stimulus options are put into play. The question around what additional funding they put into place probably centers around how effective they think it's going to be. I know one of the big discussion points has been local governments and the level of off-book debt that they're currently carrying that can't be accounted for. And I think one of the problems right now is nobody knows how much debt that is. So I think the stimulus is partially going to be targeted towards cleaning up that debt and transitioning it towards government-held debt, which is a good thing for long-term economic stability here, but isn't really going to do much to move the needle as far as growth. The other thing that they've talked about is making it easier for banks to lend money. So basically helping to recapitalize the banks and encouraging them to lend. The problem right now, though, is when you talk to private businesses, they don't want to borrow because right now they've heard basically nothing from the central government about how consumers are going to be enticed to spend. And until that changes, I think we're sort of in a deadlock. But I think, from the government's perspective, they don't want to do too much because there's a fear that they did too much in 2008. They did too much during previous stimulus initiatives, and they feel like that money maybe is going to be misused or they don't really have a plan to use it correctly.
So there was this a report which said that they're going to put money, the Reuters report, right? They're going to give families, a certain amount of money, more than one kid. But there was nothing of that sort that we heard out of that press conference on Saturday. You spoke about how businesses are wary whether how will consumers spend, how will the government directly incentivize consumers to spend. So why should companies invest if there's no demand on the other side? Do you think that's the big one, which perhaps is needed to boost consumption?
I think the interesting paradox we have here is actually Chinese families do have money in the bank. It's not as if they don't have the money to spend. But we have a very, very strong confidence issue here. We still have a very high unemployment rate with workers under the age of 24 right now. So that entire age group, which really should be driving entry-level retail spending, are just sort of sitting at home, not spending any money right now. And then when you look at families, they're still very concerned at how their wealth has been impacted by the real estate market here. And so far, there hasn't been enough direct commentary from the central government to say, hey, this is how we're going to really, truly support developers. This is how we're going to turn the real estate market around so property starts appreciating. I know we had some lowering of interest rates and some lowering of mortgage rates that has helped families a little bit, but it still hasn't really been enough to get families to really feel secure that it's okay now to start dropping money on fancy restaurants or on travel or on clothing or on cars. And so that messaging really needs to happen in order to kind of pick things up, because right now, almost everything that China has done has been focused on exports and on manufacturing. but they're hitting diminishing returns as far as what that can accomplish. And I think they don't really understand how to drive consumer sentiment.
All right, thanks a lot for joining in and giving us your view on that. We look forward to touching base with you and getting an update as and when measures are announced.